Ben Cotton of Earth Capital Partners speaking to me earlier. Now, just across the water from here lies Bahrain. The small Gulf state has long established itself as the region's banking hub. But after further protests in the capital, Manama, this week, it seriously risks damaging that reputation. So in a region already struggling to win back investor confidence in the wake of the financial crisis, what can banks here do to reassure investors? A question Nima Abouari put to Daniel Diemers of Booz & Co.
In the crisis now, people have lost money, and in some cases a lot of money. So we're talking 30–40% of total portfolio value, which is a lot. And clearly this has changed behavior. So coming out of the crisis, these clients will now say, okay, I want to know how much is my reward, but I want to know how much is my risk. And if that is not kind of in line, they will probably ask questions. And it is on the private bankers to really answer these questions. So we're probably moving from a more product selling model into an advisory model. Clients will want to understand more about the products. They want more transparency about the pricing. They want to know where is my money going and when do I get it back and what are any risks involved.
Why is there so much money in banks in this part of the world?
What happens in every crisis is if I feel insecure as a client, I want my money closer to me. And then some of the key investment, let's say countries like the United States, specific countries in Europe, had certain issues during the crisis, which of course then led to this backflow of money back here into the region. And the benefiters of that were often the local banks, who of course offered their clients a very easy deposit facility, so it's a safe haven where you can park your money. And this is, I think, at the heart of the transition that we see now coming out of the crisis. Money that has been parked in these deposits will likely not stay there forever. So some investors will always have a need for a certain part of their wealth to be in deposits, but a lot of that money will now look for other opportunities, whether it's in the region or it's outside.
So what will happen if local banks don't improve the business of banking?
Well, someone else will take the money, and in this case it will be mostly the international players. I mean, they are of course waiting for that. They are seizing their chance. And we know that most of these players today look at the Middle East, they look at Asia. These are the emerging markets. This is where a lot of wealth is being generated. So they'll be really ready here to attack on the market now coming out of the crisis. So it's actually a must for the local banks to ramp up. And if they don't, if someone doesn't play in that private banking arena, which is a fair strategic decision, I also have to say, maybe not every bank will decide to really ramp up on private banking, because it's an investment that you have to take with a certain strategic, of course, perspective to that. So those who will not do it, the money will go to someone else.
Daniel Diemers of Booz & Co speaking to Nima Abouari there. Now it's time for us to take a short break, but when we come back we'll examine the economics of aid. We'll be on the border between Libya and Tunisia as relief efforts get underway to help thousands of refugees.